and welcome to Startup Street. I'm Ritu Singh and with me is Arundhati Ramanan. Here are the top headlines from the startup space. Paytm cuts its losses by nearly 50% to 292 crore rupees in the quarter. Revenue crosses 2,500 crore rupees, clocking a growth rate of 32% over the previous year.
SoftBank Wait's affiliate SVF Growth Singapore offloads 1.09% stake in Zomato. On the exchanges, about 9.28 crore equity shares of Zomato change hands in a large trade, taking the stock over 1% higher.
Blinkit's revenue from operations surges 207% to 724 crore rupees and net loss widens to 1,190 crore rupees in FY23, the first full financial year of its operations after the pivot to quick commerce and acquisition by Zomato last year.
Microsoft reports a 39% increase in revenue from India, touching nearly 14,000 crore rupees. Profits also rise 30% to about 650 crore rupees. Meanwhile, Microsoft's LinkedIn is laying off about 700 employees across engineering, products, and other departments.
Tata Motors acquires a 26.79% stake in digital logistics solution platform Freight Tiger for 150 crore rupees. Tata Motors to further invest 100 crores in the next 2 years at the then prevailing market value.
Bharat Agri, an advisory-led e-commerce platform for farmers, raises 35 crore rupees from Arkham Ventures, Capria Ventures, and existing investors. The fund will be used for expansion and to strengthen last-mile delivery.
A policy draft by the Delhi government proposes a complete shift to electric vehicles by 2030 for cab aggregators, delivery partners, and e-commerce companies, triggers a sharp slide in local city gas player IGL as well as peers.
Social media platform X would soon get 2 new premium subscription plans. CEO Elon Musk announced one is low cost with all features but no reduction in ads, and the other is more expensive but has no ads, Musk said on X. Those were the headlines that we're tracking for you this evening, but our top headline, 197, parent company of Paytm, has just reported its second quarter numbers. Ritu, take us through the highlights.
Well, Paytm has narrowed its losses by almost 49% year-on-year for this quarter at 292 crore rupees compared to 571 crores that we saw in the same quarter last year and 357 in the previous quarter. So it is a decline in losses compared to the last year as well as sequentially. The revenue from operations, that has jumped by 32% over the previous year, coming in at 2,590 crore rupees, and that's up 8% sequentially. Now, the company also said that its EBITDA before ESOPs improved to about 153 crore rupees compared to 84 crores in the previous quarter, excluding UPI incentives. Its payments revenue increased by 28% over the previous year at 1524 crore rupees, while the payments profitability also improved with a net payment margin expanding by 60% over the previous year. The revenue for financial services and others, that grew 64% during the quarter compared to the same period last year. Paytm said that the total number of unique borrowers who have taken a loan through its platform has increased by 51 lakh in the last 1 year and now stands at 1.18 crores. The number of loans that have been distributed through the Paytm platform, that grew to 1.32 crore, which is an increase of 44% over the previous year, while the value of loans distributed grew to 16,211 crore rupees. Remember, it's not that Paytm is giving out these loans, it disperses these loans in partnership with other lenders. Its commerce and cloud revenue, which is the third vertical, that grew by 12% year-on-year to 423 crore rupees. This even as Paytm's indirect costs increased by about 26% because of an increase in investments in marketing and in employees. The average monthly transacting users, which we call MTU, on its platform, that stood at 9.5 crores, and that's a jump of nearly 19% over the previous year. So that is as far as Paytm's numbers are concerned. Now, we have our next segment with an investor. Private equity platform Singularity Growth has announced the first close of its 500 crores in its 1,500 crore rupee Singularity Growth Opportunity Fund 2. Now, this fund is going to invest in energy transition, consumer, financial services, enterprise software, differentiated manufacturing sectors, and it's also going to selectively invest in some listed growth equity opportunities as well. The fund is targeting investments of around 75 to 175 crore each per company across about 14 to 18 deals in the next 2 to 3 years. Joining me now to talk about this is its founder and Chief Investment Officer, Yash Kela. Yash, thanks very much for your time here on CNBC TV18. Let me start by asking you how easy or how hard has it been raising money in this environment, and by when are you eyeing the final close of this 1,500 crore rupee fund?
Ritu, first of all, thank you so much for having me over here. I think, the strategy that we launched this product with ensured that, the fund is tightly tenured. Given that as a background and the entire momentum that we see from the Indian LP landscape, it has not been very difficult to raise this capital. Of course, there's a great goodwill that the platform and the brand carries. Just to give you a context, our last fund, we took about 12 months to raise this capital, and it took about 2 months for us, to do the first close at this quantum. So clearly, I think what is helping us is the strategy with which we are executing this portfolio.
So by when will you get to that 1,500 crore sum? In another 4 months at that rate?
I wish I knew the answer to that, but we have a lot of Indian institutional investors having interest in this strategy. The fund has gone to the second level of distribution through distributors. So we believe that we should see good traction from here onwards. And the fund has done the first transaction in this period of Navratri. So we are excited about what is ahead.
What is that transaction that you've done, in the Navratri period? Is there only one that has been closed so far?
For this fund, in the last 2 quarters through Growth Equity Fund 1, we have done 8 transactions. This recent one that we did, which was the first transaction in this fund, is a 4-wheeler light commercial vehicle EV company, which is based out of Hyderabad. So the announcement will come soon.
So 8
in line with
investments
energy
already made from the first close of this fund?
That's correct.
Go ahead, Yash. In line with?
Sorry, I lost you for a bit, but what I was saying was, in line with energy transition, which is one of the core theses of this fund, we stand bullish on that category and everything, particularly the manufacturing base that has to be built in this country to support energy transition. So the first investment that we made was a company called Loham Clean in this category, and the second investment in this thesis we made in a 4-wheeler light commercial vehicle company. It has partnership with a global EV major, and the products will come into testing in January.
I see. I think you've dropped enough hints, Yash. We'll get back to you on that. But, you're clearly excited about the EV space. What else? What would you say is the core investment strategy when you look at this fund? And, what are some of the other sectors besides EV that you're excited about?
So, Ritu, one of the things for us as growth equity is to go after sectors which are seeing, a higher growth. I think what we target is if that growth is possible for a 7-8 year time frame, and capital efficiency becomes key for us. In line with this, the sectors that we have picked apart from energy transition. So consumer clearly continues to be one important sector for us, and particularly omni-channel, which is backed by omni-channel distribution and manufacturing. Financial services, and particularly fintech infra platforms, which have reached a certain size. And manufacturing, which has technology and IP, which makes it differentiated as compared to a pure play contract manufacturing play. These 3 becomes important sectors. Selectively, we do enterprise software.
Yash, what are the timelines you're working with? With this 500 crores, you said you've already invested in 8 companies, and the total investments you're looking at is 18. By when are you targeting to deploy that? And will the investment size be very restricted to this 75 to 175 crore figure you've given us?
Ritu, just to clarify, as a platform and as a fund, we did these investments out of our earlier fund over the last 2 quarters. The new fund that we have launched has done one investment in connected to another. To answer your
Okay.
earlier question, our deployment period for any pool of capital is generally over 3 years. So if we see timeframes, and particularly a time frame like this where there is a clear dispersion between public and private market comms, and at least for businesses which are profitable and capital efficient, we will go aggressive in those timeframes. But on an average, over 3 years, we will deploy this capital.
Speaking of public markets, from your Fund 1 and other companies that you've already put in money a few years back, how many of them are ready to go to the public markets?
Ritu, 9 out of the 17 companies are directionally slated to get listed. One has already got listed in the last week of September. We see 2 companies which are filing for DRHP, which will get listed around the January to March timeframes. And every year we have 2-3 companies in the pipeline which should get listed. But 9 out of 17 companies we see directionally can get listed out of this portfolio.
Yash, you're very careful about not dropping any names, but thank you very much. It was a pleasure speaking with you, and we hope to have you back when you're able to close that fund and tell us more about your plans for it. Thanks very much, Yash.
Thank you so much.
On that note, it is time for us to head into a short break. But coming up next, sports tech startup Game Theory has raised $2 million in a pre-Series A funding round. We learn about its fund allocation plans and expansion plans on the other side. Stay tuned. Welcome back to Startup Street. Game Theory, a company that works in the domain of real sports, has raised $2 million in a pre-Series A funding round. The round was led by investors like Nitin Kamath, owned Rainmatter, tennis player Rohan Bopanna, and others. The round also included investments from Way Ventures, Prequate Advisory, and angel investors like Balakrishna Adiga. How does the startup plan to use the funds, and what's the growth strategy? We're joined by Sudeep Kulkarni, the founder and CEO of Game Theory. Sudeep, thank you so much for joining us on Startup Street today. Now you're essentially using technology to make sports more engaging, accessible, and habit-forming. So tell me how it works. Just explain that to us.
Well, thank you so much for giving us this opportunity to share about game theory. It's as simple, right? Because currently the problem around sports is that you can't find people to play with, right? And a game is only great when you play with people of similar skill level. So essentially our technology measures your skill level when you play, and then it connects you with people around you. So instead of calling up people and finding a time, you just have to click a button and show up and play your game. We make it that easy, and that's essentially what we're going after.
All right, so you're making it easy for people to connect and play sports together. Before I discuss that a little bit more, you've raised fresh funds. So talk to us about your fund allocation plan. What's on top of the agenda?
So we're building some core technology. This involves some deep tech around computer vision and a lot of AI to measure your skill level. We also get into a level where we'll be able to provide pro stats to everyday players, which was just available to professional athletes all this while. So that core technical development becomes 50% of our investment from this fundraise, and another 50% is where we will expand into more and more facilities. Essentially, we take up facilities and operate them. So the other 50% will go towards expansion.
All right. And, going back to the users that you have, how many users have you seen come onto your platform? Talk to us about the kind of impact you're creating, and how are you connecting people with finding equally skilled players? Finally, also, what are the kind of partnerships you have?
Yeah, so we have about 25,000 registered users right now. We're still very early stage. We're still making our roots. We have actually, these 25,000 users have played almost 1.5 lakh games in the last one month alone. Essentially, what we do is we have a smart court technology. So we go in and convert every court into a smart court. What that does essentially is it has a television screen, has a camera, has tablets, and multiple things that essentially give you your game videos within 1 hour after you play. And this technology in itself is then used to sort of the camera feed, a lot of algorithms behind it, measure your skill level, and that's what leads to the experience post the game itself.
All right. And what about your revenue model? Talk to us about your revenues. What are you currently clocking, and what are the targets that you've set for FY24?
Yeah, we've gone from zero to 40 lakhs a month in the last 4 or 5 months.
Right.
So the growth has been rapid, and this was before the fundraise. So we expect to grow a lot faster from here after. So for the next 1 year, we are looking to stay in Bangalore, expand to a lot of facilities. The way we make money is from facilities where we take over and operate. We are able to create a delta of revenues over and above what the facility can make because of the standardized service and our technology. So we will expand that in Bangalore, learn a lot about what we are doing right and what we are doing wrong, and then look at going to other cities towards the end of the next year.
Okay, so you look at other cities towards the end of next year. But in addition to the existing sports that you have, like badminton, swimming, and squash, you're also going to soon introduce tennis, table tennis, and football. So how soon will we see these sports on your platform? And currently, which are the sports that you're seeing the most demand for?
Yeah, we're seeing that badminton has the most amount of demand apart from swimming. The way our technology is built is it's built for racket sports first. So our focus will be racket sports. The next phase will be anything to do with racket sports. But post that, we will start expanding into football and any other team sports, primarily because we want to have that core problem solved with technology, and only then we think we'll have a monetizable model. So with our partnerships now, I think Rohan Bopanna's investment will help us build out the tennis fairly quickly, while we will continue to add some more exciting sports like pickleball and paddle tennis, of course, in the near future.
Right. So a couple of sports there that you're looking to add. So you just explained to me that you're first going to see how you can expand within Bangalore before you take it to other cities. So talk to me about, if you're looking at the next cities, which would be the ones that you're immediately going to expand into?
We are looking at the market trends, and it looks like Hyderabad and Chennai have a high amount of facilities, apart from Delhi, of course. But since it's close by here, we thought about it, but still we haven't got too deep into it. These two form our primary markets again post Bangalore, but we will see how things pan out and take calls later.
All right. So you want to see how things pan out and then take the calls. So what's the 1-year target? What's the 1-year game plan for you guys going forward?
We have a PMF already, so we are looking at expanding in Bangalore very, very aggressively. We think there is enough demand just in Bangalore for 100 facilities to be smart code facilities. And we also look at it from a 100 crore kind of a revenue target that we can achieve in the next 1 year just in Bangalore. So that will be one segment of it, but we are not a facilities only business. We are a technology play at the end of the day. We also see that we can generate income from the digital side of things because of the smart code infrastructure and the game-like environment that we'll create. We think we'll be able to generate digital revenues, and that forms the second portion, which is untested so far, but we have to figure that out as well.
Right. So looking at new more avenues for monetization. All right, Sudeep, thank you so much for joining us on the show, but we wish you all the best going forward.
Thank you very much. Thanks for this opportunity.
Thanks very much, Arundhati, for taking us through that conversation. Now, in some other global news that we're tracking for you today, we also understand that Microsoft has reported a 39% increase in revenues from India, touching nearly 14,000 crore rupees. Its profits have risen by 30% to about 650 crore rupees, and meanwhile, Microsoft's LinkedIn has announced that it is laying off about 700 employees across engineering, products, and other departments, as we reported earlier.
And staying with global news, Elon Musk said in a tweet that X will launch 2 new tiers of subscriptions for users. Formerly known as Twitter, the company will introduce one tier which will be lower the cost with all features but no reduction in ads, while the other tier will be more expensive but without ads. Remember, the social media company already has a $8 per month subscription service called X Premium. It is Friday, so let's take a look at the startup funding picture. According to Venture Intelligence, Indian startups witnessed 15 deals valued at $151 million this week. This includes names like wealth management company Neo, who raised $35 million from Peak 15 partners. Space tech startup Agnikul Cosmos backed $26.7 million from Celesta Capital, rocket ship VC Artha India Ventures, and others. Now, other startups that raised funds this week include digital platform Freight Tiger, which got $18 million, pharma-focused B2B SaaS startup Lucene added $7 million to their bank, and last but not the least, rooftop solar company Freya Energy raised $7 million. Startups have seen 458 deals worth $5.57 billion in 2023 so far.
On that note, we're going to wrap up this edition of Startup Street. Thanks very much for watching. More news and updates will continue on the other side.